This is episode 1138.
I was at a dinner just actually a few weeks ago with a bunch of public company and private company CFOs, and the issue of stablecoins came up. And really sophisticated CFOs that I respect, that I know are very smart, looked at me really confused and open and on. We had like a very open type of discussion where people could let their guard down. And they were saying like, I don't know anything about this. Like I hear about it all the time. I don't know how risky it is. I really don't understand it. I don't understand the use cases. And I walked out of that dinner feeling, going in two directions. One saying, oh my God, like these are the smart people and they really don't understand this. But also incredible excitement about how early we are in enablement and understanding the capabilities of it. And so that's super exciting.
There's a moment every finance leader faces when the familiar playbook no longer fits the next chapter. For Michael Levine, that moment arrived not in a boardroom, but on a quiet beach in Punta Cana. After taking Payoneer public and scaling it globally, he found himself staring at the waves and realizing he missed the work. Fast forward, and he's now the CFO of Fireblocks, where the finance frontier meets blockchain infrastructure. In this conversation, we explore how a traditional finance operator finds purpose and discipline in one of the most volatile arenas of modern business. Stay with us. Hello, CFO Michael Levine is back with us. Prior to joining Fireblocks in mid-2023, Michael spent over a decade as the CFO of Payoneer, where he played a key role in scaling global payments and leading the company to the public markets. Michael, welcome.
Thank you, Jack. I'm very happy to be here.
So, Michael, you actually joined us about 5 years ago back in your Payoneer days, and back then you walked us through your career journey. A lot's happened here, Michael. This is a whole new realm for you. So we were excited to have you back as a guest and tell us about your journey here, to Fireblocks. Tell us something about what all transpired.
Sure. Well, 5 years ago, I was with a company called Payoneer, which was a fintech that had a significant scale story where we went from about 100 employees to over 3,000 employees and consultants. And we had gone from $150 million of annual volume to over 80 billion a year. So really used to scaling. Is also very global, with over 190 countries that we did business in. So had gone through that journey of small to large, private to public. We took the company public in June of 21, and also unregulated to regulated. So going through all those was an experience to live through over an 11.5-year period. I stepped down in early 2023 and was trying to decide whether it was time to actually do an early retirement or do something else. But I was actually quite tired at that point and really needed a break. And as your public company CFOs can attest, being a public company CFO, it draws on you after a while. You're always on, you never have an off switch. So I really needed a break. And, the story goes that, about a month after I had stepped down, I finally had some time off and wasn't sure what I wanted to do. I was sitting on a beach in Punta Cana, And it was like the perfect moment. It was the afternoon. I was by myself. There was nobody near me. It was white sand, turquoise blue water. It was everything I wanted with one exception. I didn't have my phone and I didn't have my laptop. And I realized that that's what makes me happy. Like I love being on the beach, but I love doing work from the beach. And so what I realized is, unfortunately, I'm a workaholic and, I really needed to get back to doing something. So what happened was I was getting a lot of inbound calls from crypto companies, and this wasn't what I was kind of my core function. In fact, I'd come from a payments business that our banking partners had basically said to us, we don't want you touching digital assets. So for me, we actually purposely stayed away from crypto. So it wasn't something that I was familiar with in any way. But I was getting calls from crypto companies, I think because of the experience of scaling a business, of having the international experience, going from private to public and unregulated to regulated. And those are all the things that crypto companies were looking for in a CFO. But it was also what we call the crypto winter, meaning it was really a bad time for crypto companies. There were a lot of companies that were going out of business. There was obviously the FTX scandal. There was just a big negativity, and majority of CFOs that probably those companies wanted to hire weren't interested in going into crypto at that point. But for me, it was kind of a free option to learn about something that I never had the option to learn about before. And as I started to listen about the opportunities, what I found was this concept of decentralized finance, of the concept of smart contracts, and what the underlying technology allowed one to do was really fascinating. And at that point, the recruiting firm Spencer Stewart had reached out to me to meet the CEO of Fireblocks, and we had dinner. And what was fascinating was the view of kind of the different curves of where crypto is today versus what it could be. And when I say crypto, it's generic for blockchain, digital assets, and so forth. But really, the first curve or first phase, if you want, was really about speculation. It was about trading. It was about taking one digital asset and trading it for another digital asset. And that's what the world has been focused on, super majority of it up until now. When we think about the phase we're in now, let's call it the second curve, is kind of what you see with stablecoins. It's the concept of tokenization and basically representing something digitally. So in this case, representing fiat, like the US dollar as an example, through a stablecoin. And then the third was really what we call RWA, or real world assets, which is this concept of tokenizing anything, including stocks, bonds, commodities, money market funds, and other things. And that became really exciting to me. And so when I heard this kind of evolution, this vision of where digital assets and blockchain were eventually going to go and the size of those markets, the TAMs, wow, it was super exciting to think about, where this potential industry could go over the next decade, realizing that's a long-term vision. And so without knowing anything about the space, and starting to learn and hear from different companies, I had actually received several calls from different companies in the space. I was confused and I didn't know which horse to pick in the race. And I think what I would say, and my advice to anyone, is when you don't know which horse to pick in a race, buy the racetrack. And that's what Fireblocks was. It was an infrastructure play that was going to do well, whether or not whoever the winners and losers were, because it's a portfolio approach. And ultimately, if you're the biggest infrastructure player in a particular sector, you're going to basically partner with all the winners at some point. Many of the losers, but ultimately the winners will outweigh the losers in terms of who will ultimately perform well. And so that's what really excited me about taking a jump into a completely new space in terms of the crypto world. And so decided to come to Fireblocks. And Fireblocks is basically a simple way of explaining it. It's the infrastructure that provides what we call self-custody. And what's important in layman's terms for people to understand about the world of digital assets those assets are represented by a set of keys, effectively. And those keys, those digital keys, give you access to the value that is in, or what digital assets you own. And so Fireblocks provides basically a software provider, which that software is a platform that allows you to self-custody or self-control those assets, and to do it in a very secure way, which is super important because you hear about hacks in the crypto industry. And the founders of Fireblocks came out of the cybersecurity space. And so everything, when they actually started the firm, they realized that there wasn't enterprise grade security protecting the assets of digital asset holders. And so as a result, everything that they built was built on enterprise level security. And so that's why they became the dominant player in the industry.
That's a great overview for us, Michael. I do have some questions for you, though, about you yourself, that person back on the beach who realized they were a workaholic, as if they heard it for so many years, but finally they had to come to the fact that, yes, they were. Would you have done this? And again, we had a talk before we came on that, there's quite a few CFOs who have very little knowledge of the crypto realm. And perhaps you were one of them at a place in time.
Very much so.
But in part because, well, it's a frontier. The risks there's uncertainty how this whole thing's going to advance forward. And we'd like how you explain the infrastructure piece of it and why that might have more certainty than other parts of the world. But would you have done this earlier in your career? Would you have gone to something as formative and a frontier-like as this realm 10 years ago, 15 years ago? Or was that person on the beach someone, hey, you had taken risks before, but you were at a place in time where you could take more risk upon your career?
Oh, for sure, the latter. I think everything happens for a reason, and career-wise, look, I'm still learning every day, just in terms of how to be better at what I do. And everything that I had gone through in my prior experiences really set me up for this opportunity today. I mean, I came into the leader in our space. And I would have never even given that opportunity unless I built up the skill set that I did at that point. So I don't know if I would have been as good 10 years ago at doing this job as hopefully I am today, from the benefit of getting a lot of experiences and having a lot of ups and downs and seeing things that worked and things that haven't worked over time. And I've evolved over time as a leader, not just as a CFO, but as a executive leading a company, and, also just from setting culture, and my EQ has evolved over time as an important part of my persona as a CFO. So all these things have culminated over time based on all those experiences. So the quick answer to your question, Jack, is I don't think I would have taken it, and I don't think I would have been ready 10 years ago.
And again, that scene you helped illustrate for us, you sat down to meet the CEO, I guess, of Fireblocks at a lunch or dinner. Obviously, you'd gotten to know crypto before you took your seat at the table there. But were you really thinking that I might stay?
No, I'm still learning. So number one, it's an industry that, and it's part of what keeps me young, is that, one, it's a young industry. So a lot of people, a lot of young people in the space, which I love. And it's intellectually challenging. It's not a job that you can say, wow, I've been doing the same thing for this many years. I'm getting bored. No, it changes on a daily basis. And it is so futuristic in terms of taking a underlying amazing technology in terms of blockchain, and then having entrepreneurs think about how can they leverage that technology. And, sometimes, and then look, I'm old enough that I go back, and probably you remember as well, the beginning of the internet. And I remember conversations where people would say, all right, I can send an email, which is great, but what else is this thing going to do? And today, like, go onto a bus or a train and look to find somebody who's not on their phone doing something via the internet, or what it ultimately helped evolve other technologies to do, whether it be starting my car or opening a door or doing anything that we never contemplated, or maybe visionaries contemplated, but most people didn't think was realistic when we were at the stage of just using email. I think the idea of blockchain and the attributes it has to allow, in terms of provenance and understanding, things like, theoretically, I'll give you an example. A lot of banks and a lot of the financial world really depend on things like anti-money laundering, Bank Secrecy Act, KYC, all these regulatory requirements to make sure that the funds are coming from good actors. In reality, the technology of blockchain should allow, if I were to, come over to your place and give you a $20 bill, it's from me, but you don't know where I got that $20 bill. Theoretically, with blockchain technology, from those serial numbers, every human being that's ever touched that $20 bill, going back 30 years ago when it was minted. That's incredibly powerful once people learn how to leverage it. And so again, the technology, the idea of a smart contract that I could give you that $20, but I could tell you that, hey, Jack, it was really for you to, go buy yourself a gift. And so in the smart contract, I'm going to give you the $20, but I'm going to say in the smart contract that $20 can only be spent at certain places, because I know I want you to get a gift. I don't want you to give it away to someone else. I don't want you to spend it on someone else. I want you to spend it on yourself. So I can put in the smart contract specifics. And when you think of that kind of power of what that technology offers for the future, it's super exciting about where you think this might go in several years.
When finance leaders approach you, or your peers, senior finance executives, what do they want to know? What is it that they're asking you?
Yeah. And I do mentor a lot of CFOs. Just again, I've been around the block now that I've learned from my experiences, and I love sharing those with others. I do get a lot of questions about the industry now, because, again, I'm coming from a traditional finance side, and I went from traditional finance into fintech, which is now bringing into the technology part and now going into crypto. And so I was at a dinner, just actually a few weeks ago, with a bunch of public company and private company CFOs. So it was a peer group dinner. And the issue of stablecoins came up, and really sophisticated CFOs that I respect, that I know are very smart, looked at me really confused and open and on. We had like a very open type of discussion where people could let their guard down. And they were saying, like, I don't know anything about this. Like, I hear about it all the time. I don't know how risky it is. I really don't understand it. I don't understand the use cases. And I walked out of that dinner feeling, going in two directions. One, saying, oh my God, like, these are the smart people and they really don't understand this. But also incredible excitement about how early we are in enablement and understanding the capabilities of it. And so that's super exciting. When you think about, CFOs, we think about TAMs. What's our addressable market? How big will it get? Where is it today versus where will it grow to? And that's what gets me excited, is just knowing that it will take time. And again, you have to have a long-term lens to be able to commit to this. But like having been through the evolution of the internet, I can truly appreciate where this will be going. And first, the CFOs of the world and treasury people need to understand the benefits of it. But over time, it will be quite meaningful and will permeate through, a broader selection of professionals and eventually individuals who might not even know they're using blockchain technology. But if I could give you a quick example. So my company
Sure.
today, between 25 to 30% of our receivables are actually paid in stablecoin. So we have a large number of customers in Japan or all throughout the world, but my customers in Japan send us funds via stablecoin. Because of that, I don't have any yen exposure. I don't have to concern myself with of converting the funds or hedging yen. I have everything in a dollar equivalent, and funds come, instantaneously. They could be paid on a Saturday night at 2 a.m. or on Christmas Eve. There are no limitations, and so it's very easy for us to reconcile, and it's very easy for the customers to send the funds. So we're seeing utility. We're realizing that our customers are a little bit more crypto friendly at this point, but eventually, again, once that enablement, once the understanding of the use cases, the speed, the cost, the utility that comes from being able to receive, again, dollar equivalents, or if you want to have it in euro equivalents or whatever underlying fiat currency you want, that ability is creating real utility. And it's just people don't realize what that utility is yet. But now with, I think, a lot of the clarity that's coming through some of the bank legislation, the Genius Act was the first, and now there's the Clarity Act or market infrastructure legislation that is being discussed right now and hopefully will pass soon. The banks are getting much more comfortable on allowing their customers to touch digital assets in a way that even a year ago wasn't possible. And from that, you'll see a lot more entrepreneurs that now can get their banks to support them, that will now have an opportunity to try new and exciting things with this technology.
What about your, the finance organization? How, given the nature of what this business does and what it's about, how is that finance organization likely to look different from more traditional organizations in finance?
It's a SaaS business, and I actually came from a payments company. So payments is traditionally an ad valorem business, and coming into SaaS was a whole different world for me. I mean, now it's funny. It's actually funny. My best friend is a venture capitalist who focuses on software, and he would use, all these SaaS terms all the time and talk about ARR and a whole bunch of different, I'm not going to bore everybody with all the different jargon, but it was a different language for me when I first came here, and I had to learn it pretty quickly. And now I have a real appreciation that I never had before. So for me, again, it was part of that professional journey of now becoming not only a tech CFO, but a SaaS CFO, and understanding how investors look at SaaS and also just how SaaS companies are run and what's important for measuring success at SaaS companies. But there's also a lot of, from a concentric standpoint, there's a lot of overlap with any kind of finance organization. And, probably what I said 5 years ago when we spoke holds true and will ring true forever, which is my role as CFO, most importantly, is to raise the bar of everybody on a team for whatever their respective function is. And so the most valuable thing I can do is to teach people to always ask not just what happened, reporting the numbers, but why did it happen? How did it happen? When did it happen? And, what can we do to make it better? And so really that mindset of not just reporting information, because I'm what I would call, my definition is I'm a strategic CFO. I'm not someone who came up through the traditional accounting ranks. I started my career as an investment banker. So it was always understanding a business model. And so at nauseum, I think the people here are very used to not only the finance organization, but all the leaders of the organization of putting a financial lens in front of everything and understanding how do we make the machine, how do we get the output to come out faster? So I'm, even though I've been in tech for many, many years, I'm an old school cash flow guy and I love cash flow. But understand the importance of, getting the plane at a speed where it can take off, keeping the top line growth, to be able to command a meaningful premium, but also thinking about how do you do it ultimately to drive profitability.
So, like, given crypto's volatility and regulatory uncertainty out there, how do you build guardrails in financial planning and forecasting within finance?
I think that's part of what we're seeing in terms of the evolution that we just spoke about, meaning that, so one, the regulatory side of it is becoming much more clear. And I think in the US, but all throughout the world, I mean, markets in the Middle East, we have our businesses in Dubai and Abu Dhabi and other places throughout the Middle East. That's becoming, a quick leader within digital assets. Hong Kong now is evolving in Asia and the APAC region. Singapore has always been strong for many years, but now we start seeing Hong Kong as an offshoot to China starting to pick up momentum in digital assets. It's really a global phenomenon. And so I think regulatory leads, and we are starting to see, again, things like stablecoin, the use, the entrepreneurialism of taking something, and for people who aren't familiar with stablecoins, it's just a representation of a US dollar. So unlike Bitcoin or Ethereum, which could move X% in a day or a week or a month, the value of a equivalent dollar of stablecoin is going to be worth $1 tomorrow. It's going to be worth $1 in a week, and it's going to be worth $1 in a month and a year. And that shouldn't change. That's the whole essence, is it's backed by a physical asset. And it's representing that physical asset that's backed by, but the technology allows it to move around the world instantaneously. And so that's really the crux of the benefit.
How do you find yourself educating your stakeholders, spending more time? The way you spend your time as a finance leader. You mentioned how you've come to rely on the EQ part of yourself. It seems like a big part of your role these days is educating the greater ecosystem and learning.
Well, I'll say it based on your question, and it's balanced, meaning that I'm for sure not the smartest crypto guy in the room. There are many, many, many people in my organization who are brilliant and know much more than I can try to attest to. But I think the leadership side of it, and you brought up EQ, I think EQ is a really important part, because ultimately, whether I have a PhD or somebody who just graduated undergraduate, whatever level someone is working for 20 years, I have to motivate them. And the important thing that I try to push through, not only to my leadership team, my direct reports, but to my peers, the other leaders in the organization, is the approach of how do you motivate people, not just in your teams, but throughout the organization, and try to be a role model for people. And to do that, I usually start my conversations with people with the first question, which is, how are you? How are you doing? And I've seen a lot of people, one, just completely ignore that step to show like, hey, I care about you and I want to invest in you. I've seen people who just treat it as, let's get to the work. Like, where's that report I'm waiting for? What's the status of this? And I think there's a big difference when you motivate people to know that everybody wants to be loved and everybody wants to be appreciated. And I think when, as a leader, you can make people feel that, you know what, you're not just a number, like you're somebody that's an important part of the mission. And it's actually important to me that you develop as a person and professionally. And if you give me, I'm going to give you back. It makes all the difference in the world. And that's how you build great teams. So again, back to your original question. Yes, I speak to people on the aspects of crypto, blockchain, digital assets, but as much of my time is focused on asking someone, how is that big vacation that you just took, or how is that family reunion, or how is that milestone in your life? How did it go? I remembered. It's really important for me, at least, and I think as a leader, again, not just in finance but the organization, I think it's really important that people can feel comfortable that they understand me and know me, and it gives them buy-in that there isn't an ivory tower that the executives are in that they never see. I think it's important to try to get out with as many people in the organization as possible. It gives me insight to what's going on in the organization. I just reached out to somebody in Singapore right before this call that probably is not very used to speaking to the CFO of their company. They just celebrated their 1-year anniversary. And that person is our regulatory person in Asia, and one of our regulatory people, and a brilliant person. And I learned so much from that conversation. And I thanked her, and she was thanking me. She was saying, I learned more from this conversation than you could possibly imagine. And I thought I was on the receiving end. So it's bilateral. And I think it's really powerful when the CFO can get that out of people. It's like a director getting something out of an actor in a movie. How do you get that commitment to the role?
This being a SaaS business, we could make some assumptions about your top of mind metrics and KPIs. I'm just wondering, what's one that we might not have assumed, is something that you watch regularly, whether daily or weekly. But can you reflect a little on the KPIs and top of mind metrics for us?
Sure. Again, I think there are specifics to SaaS companies because of the fact that they trade at premiums, because they have contractual revenues. Mm-hmm. And so there's a view by investors that should trade at a premium because it's not subject to volatility. Investors love consistency, upward consistency. They love to see that they can predict future cash flows. And when you have a business that's dependent on a market where it's not contractually based, that puts the cash flows at risk. And so where we have, I would say, a uniqueness in our space is that there aren't that many SaaS companies in crypto. Most of them, to your point earlier about the risk of fluctuating current, valuations of what's the price of Bitcoin, Ethereum, and Solana, and others. Many of these companies will, even if they're not subject to the exact price, the customers come and go as asset prices go up and asset prices go down. And we have more of consistency because our customers sign up for a subscription for that software that we offer. And as they grow, they need to move up to larger tiers. So again, getting back to your original question, I would say there are very, very specific SaaS metrics we're looking at in terms of the understanding the annual recurring revenue, or the ARR, and how much churn is an important part in a market that is evolving as quickly as ours, because you'll have a lot of companies get capital and then they don't survive because they tried an idea, it didn't work. And so it's not reflective of the product. We have actually very low churn related to customers that choose to go to another company. It virtually never happens. So we have stickiness with that. But we're in an industry where a lot of companies do go out of business. And so we have to understand the churn dynamics of what is driving churn, how much of it is competitive versus how much of it is market related. So that's an important part. But for me, again, as someone who not only focuses on top line growth and making sure that we're growing at a very fast pace, capital allocation is the number one critical role of a CFO. It is ultimately a set of bets that we're making as to where are we going to apply that capital. And I'll share with you, I know that in a lot of your interviews, you talk about the strategic moment, the finance strategic moment of, what has occurred. And for me, and it relates to this topic, when I came on board, when I was onboarding and I went to kind of learn the business and I sat with people, and I would ask them about ROIs and how do they make decisions on capital allocation. It was like a deer in headlights. There was no conversation to have. And I learned something that I didn't appreciate until I actually got here. I had spent the prior decade, as you mentioned, working under the leadership of a CEO who had come from the payment space and had really, and one of the leaders, a guy named Scott Gallant at Payoneer, who really is like one of the geniuses in payments. And he understood everything from a payments from an operational standpoint, from a regulatory standpoint, and so forth. And then I came here, which was a company that was founded by engineers. And I quickly came up with the realization that in an engineer founded company, it's a different mindset. And what I call a joke, or the way I like to explain it, is if you take a group of engineers and you put them in a room and you say, build me a car, they'll build you a $400,000 car. Like, they will build you a Rolls Royce. You can't blame them. They're building the best possible thing they can build. And so it's not their fault. You told them to build a car. But if you put the financial lens in front of it and you go into the room and say, build me the best car between, like, let's say $60,000 and $80,000, because I can't sell $400,000 cars. There's not that many buyers out there. But if you build me an amazing car between $60,000 and $80,000, that's like a BMW. I can sell a gazillion of those. And so really, that was really the strategic moment. And really when I knew this was the right choice, because that financial lens was not part of the decision-making process, of the review process. It was just build the best thing we can. And so when I came in, it was great that we have like world-class engineers. And some of these guys are just, I mean, the majority of these guys are absolutely, at the top of the industry, that, the smartest people you could possibly imagine. But they didn't have the financial component. And so my job was to make it cool to talk finance to the engineering side and to the marketing side and to the sales side, and basically get them into the tent to understand there's a vision of what we want to accomplish, both from a technology standpoint, but also from an economic standpoint. Because my goal is to make everybody here at this company really wealthy, to make our customers really successful, but to make all the employees wealthy too. And to do that, we have to think about the holistic approach to the organization, both from how do we serve our customers and build the best products possible and give them the best service, but how do we do it in a way that's economical? So, like, do we need a ostrich, or a lizard covered steering wheel in our car? Super expensive. And probably if we have something that's like faux leather, probably everybody's going to be happy with, right? It's like, we don't need to do overkill. Like, let's figure out where the dollars are best spent and how we can really serve our customers in an economic way so that we can give our solution in a way that's beneficial to them, but also allows us to grow so we can invest more and more into the business over time.
Thank you, Michael. Some great takeaways there for us. We want to just quickly touch on AI with you, and I'll cut to the chase. How is your finance team currently using AI? What would you tell us?
Well, we have actually across the company a goal of hitting 35% efficiency improvements through AI. So there's no one who is.
When was that set? Was that a goal from
this year?
From the last
earlier this year?
Oh, really?
Earlier this year.
How are you doing? Are you close to that? Yep.
Well, I think it's a journey, and this is one of the hot topics, to your point, that every CFO is talking about. And we're all being bombarded with a gazillion emails a day about how to do this and how to do that, and this person wants to come in and help, and that person. That's part of the challenge, to figure out like what resources do you leverage are there. So we're experimenting. I think the majority, and from talking to my peers as well, I think the majority of companies out there are experimenting with small consulting groups, trying to figure out, what will work, what will not. A lot of people are working for like Salesforce.com and others to build in more AI functions. I just, unrelated to finance, but we're working on adding a new whistleblower policy tool as part of corporate governance. And they're using AI because we're a global workforce, that if somebody wants to put a complaint in, they can put it in their native language, and it will convert that complaint back to English automatically. So you don't have to, it might be easier if you're, in pick the country, but if you're in country X or country Y, it might be easier, especially if it's something that's very serious that you want to explain. You don't want to screw up the translation, so you want to talk in your native language, and it'll automatically take the whatever the person is trying to say and convert it back into English, so they could speak in their language. And I thought that was really cool. I've never really seen that in an application used in that way. But it gives me ideas about, again, as we start building more things internally, what we should start trying to build organically into our solutions. We're moving fastest in areas like tax. Actually, we're doing things in terms of transfer pricing and building there. Our RevOps side of our business is starting to use AI in a way to speed up closing of transactions. In our close process, we're still early on. There's a lot out there that we're evaluating, and that can slow you down when you have a lot of different alternatives, and you have to kind of do a deep dive into each one of them. But we're spending time looking at a number of alternatives there. FP&A is another area that we think that there is, meaningful opportunity. So across the board, we're looking at different areas and trying to figure out where we get the most bang for the buck, because you can spend a lot of time coming up with a long laundry list and then kind of spin your wheels trying to do everything at one time. So we're trying to come up with our I think the way we started was, what are the manual activities we do? And we had, over, obviously several hundred across all of finance of things that people do on a daily basis. And then said, how do we attack the ones that are most time consuming, that lend itself to an AI solution, or not even just AI, but automation? And how do we do that? And obviously, I think another big element is data. And how do you validate data in today's world when there are so many different dashboards and sources? And sometimes you'll have two people claim that they're using the same, they have different numbers, and they're claiming that they're defining the same thing. So, using AI to track down what was the source of that, and like, oh, okay, so that number included monthly customers when that number didn't include monthly customers. That number only included annual customers. That's why we have a difference. It could help a lot, and it can save a lot of time on things that you don't put a lot of thought to, but actually takes up decent time trying to track things down.
What risks maybe concern you most about adopting AI?
I think it's the same thing about certain uses of data. I mean, I think I saw a huge amount on the data side of people creating dashboards for the sake of creating dashboards, and the super majority of the information there was being used. I think the same thing aligns with the use of AI. You have to be careful, because you can spend a lot of time and effort trying to use AI for things that don't actually add all that much value, to the point I was making before. And so, from that standpoint, it's how much where's attention being spent, and is it being spent wisely?
How do you?
But I'm a believer in terms of what the value of AI is, and the transformational power of what it can mean in the financial suite, but across the entire company.
Do you think leadership is it handing down sort of edicts, to finance managers, or not finance managers, business managers in general? Be careful that your people aren't experimenting or exploring too much here. Investing time, let's identify where AI has already demonstrated, or we have insight that suggests it'll bring greater value. Well, they need some direction. We can't just have them experiment across areas that are questionable.
Yeah, I think the answer is yes and no. I think in reality, we all have to put our technology hats on. And I learned a valuable lesson. We had a summer intern, young man who was going into his sophomore year at Stanford University, and needed to figure out what I could give him to do as a summer job. I didn't realize how brilliant he was until after he started, but gave him the responsibility of, hey, we have all these AI projects going on in finance. I don't have anybody to kind of organize or help think things through. And this young man came in and became the superstar of finance. Again, just finished his freshman year at Stanford, undergrad, but became one of the most important people we had in the finance organization, because one, he had focus, but two, he had intellectual curiosity, and he had the ability to help focus people on looking at different things in AI, and brought an aspect to it where it wasn't a part-time endeavor. It wasn't something you do for, 45 minutes at night, but it was something that he was focused on. And it really was transformational for me and transformational for our entire group. We actually begged him to keep working after he went to school after the summer, but he was so valuable to us. But that was our secret weapon and really got us, accelerated a lot of the projects that we were doing in AI.
It was an attitude. It was a mindset. It was his approach.
Well, it helped that he was brilliant, and it helped that he was a good guy. People liked him, but it was that he was focused.
Yeah.
He was focused on AI, and I think the challenge that probably is all the other CFOs out there that are listening to me now will resonate with them is when you tell people like we need to bring AI to create efficiencies or to drive new opportunities. It's a part-time endeavor. It's something that, okay, like I have to do my day job. So I have to squeeze out time to do this. And having people focused on pushing it, is really, really helpful. And, when I did see the difference when that young intern went back to school, even though he's still, giving us a few hours a week, like things changed, like it slowed down a lot. In terms of our trajectory. So one of my challenges is how do I keep everybody, keep it at the forefront, because you get drawn into doing your day job. And so the idea of being innovative and coming up with new ideas and evaluating new things, it's a burden, but it's an investment. And so how do I keep people invested in the AI journey?
So you know what my question was when you first started paying attention to the sector, and before perhaps you took that seat at the dinner table with the CEO, what did you reach to accelerate your learning? What was there a resource or there probably I don't know how many dozens of books now on the space, but you probably could help our audience sift through some of what's out there and what you'd recommend.
Well, given that we just spoke about AI, that's the answer for everything. I mean, there is, I actually, read less books now, as a result of, using AI to basically ask every question. And so I am constantly, querying, a question to become smarter on every topic every day. I don't know how many times I'm, going into our various, AI resources, but I am, constantly inquisitive. And I find that more often than not, I want to go back and do more because it kind of leads you to rabbit holes. You can go down and like, wow, there's a lot here. I want to dig on this and I want to dig on that.
You're using AI to perhaps search the web as well to bring news related or information to you or? Absolutely.
Yeah. It's the most efficient way. If I, let's say as an example, wanted to see, which issuers of stablecoin are growing fastest. I don't need to go to a website then I have to read the website. I can just go to the AI and ask it that very question. It will then survey everything out there and give me the actual answer. So I don't have to go to a source and then read the source and figure out what the answer is. It's like I've just eliminated all the middle steps and it got me to the outcome, which is what I wanted in the first place. The efficiency is incredible.
You don't need to be the smartest. As a CFO, you don't need to be the smartest crypto person in the room. You just have to know who that person is. I'm just thinking in a way, when you go to a conference, when you hear all these, forward-thinking thought leaders on the subject, you're becoming a much more astute observer of where the intellectual capital is.
Well, I don't think it's any different than the CFO of a pharmaceutical company who's not going to be, the smartest, it's not going to be smarter than the top chemist in the organization or the, automotive, car company CFO who's not going to be smarter than any of the engineers. I think the important thing is to really understand or being able to bring in the dynamics of that sector, of that industry, and how it translates into economics for the organization, for its shareholders. And so for me, what's important for me to learn is, again, going back to capital allocation, do I know enough to justify the bets that we're going to take? So, you know, in our industry, payments as a sector, banking as a sector, crypto native as a sector, you know, Web3 as a sector, there are many different areas that we can invest. Ultimately, like I take the responsibility of working with our leadership to develop the budget of how much do I want to invest in A versus B. Some, you know, and our space is really interesting. Again, this intellectual challenge, because some will take years to develop. Do I want to try to dominate the space for the future by investing now ahead of everybody else when it won't bring me short-term returns? And so making those bets is like, wow, it keeps me up at night, like not in terms of worrying, but in terms of excitement of thinking about, like, can I be smart enough to make the right decisions from capital allocation that ultimately it's optimal and pays off the best way it can? And so, the biggest challenge is just how many opportunities there are. And that's, you know, that's why I come in smiling every day, because there's an opportunity to win every single day. There's an opportunity to make a great decision every day. And there's also an opportunity to make some bad decisions every day. And so you have to stay on top of your game to give yourself the best chance and your organization the best chance to figure out where to make those bets.
Michael Levine, CFO of Fireblocks. Thank you for joining us on CFO Thought Leader.
Thank you, Jack. Great to be here. Look forward to continuing our conversations over time.